Welcome back, everyone, to another episode of Exit Liquidity. I believe we're on 87 now, I want to say. Took a week off, so you guys got a nice little break from our faces, but uh, can't keep us away for too long. So we're back this week with Aryan from CMT Digital. Aryan, thanks for joining us, man.
Thanks for having me on, guys.
Yeah, it's these venture episodes are fun, I think. It's definitely like a unique insight that a lot of people don't at least like a lot of our audience and like even people like us don't often have into the space. So it's always good to like get that insight. For those of you who don't know, CMT Digital is a crypto venture fund. Aryan is obviously a member of the team there. I'll let you start off with a little intro from a little bit about you yourself, specifically how you got into crypto, how you kind of ended up on the venture side of things, and then would also love to hear a little bit about the fund and what you guys are about.
Yeah, absolutely. Well, to kick things off, I've been with CMT for about 3 years. Got started back in 2021 with them, but originally got into the crypto space in 2017. I was a freshman at university studying economics and mathematics, and was quite interested in kind of the mechanism design aspect of blockchains. I'd been introduced to blockchain technology and Bitcoin the year prior. I was working at Accenture as a business analyst on the management consulting team, and the development partner that I was working with on one of the projects was obsessed with Bitcoin. So he introduced me to the technology. I started reading about it, and during my freshman summer, I decided if there's a time that I can get exposure to something that I'm actually interested in before the internship grind begins. At the time, I was thinking about going down the traditional finance route. Ended up not going that direction because of that summer. So spent the summer working at the Blockchain Research Institute up in Canada with the Tapscots. They were working on enterprise use cases of blockchain at the time. It was a research institute that was founded by Accenture and IBM and a lot of these types of companies. And at the time, it was great for me to get broad exposure to kind of all the different use cases of blockchain, and allowed me kind of the platform to then dive into the research areas that really interested me. So worked on a paper with them and BCG that was around mechanism design in consensus mechanisms, and how various different mechanisms, designs of consensus mechanisms, then affected price stability or price performance during that ICO era from 2018 through 2020. Data was collected. And the second paper was kind of a holistic overview of DeFi from the BRI, kind of looking to educate some of their enterprise users on what sort of the use cases of blockchain and kind of the whole scope of DeFi for their business practices could be. So that was really interesting for me. Gave me the kind of background that allowed me to move into the venture space, and so joined CMT on graduation and have been with them ever since. So I can tell you a little bit more about the group here, CMT, as well, if it would be helpful.
Yeah, for sure. I have a quick question on the whole like research institute thing. I think you said it was started by Accenture. I've heard about like stuff like that, like these like um almost like tradfi adjacent like blockchain like research institutes or organizations. And I've always wondered because like myself and a lot of our friends and even a lot of our audience does like DeFi research, but that's like uh it's like I don't know, calling it research almost feels like a stretch because I'll go and write like a 5,000 word paper on like perp dexes, and it's like chock full of memes and like shitty data that I like threw together myself. Like it's just the spectrum of like what would be considered research in this space is super broad in terms of sophistication. So I'm curious as to like you mentioned that the paper you worked on there was on like consensus mechanism design. What was like the research process like over there? Do you find it different to like doing research on your own and maybe in some of the stuff you've written for CMT?
I think it can vary. So the way that the Research Institute engages with researchers is they field kind of specialists within each sub vertical, and they'll contract them to write a paper. And then that researcher's process can kind of vary depending on their style of research. What the actual process looked like for us, it was I wrote the paper with my good friend John Robertson. We essentially collected as much data as we could for that 2 year period of 2018 through 2020 around ICOs and the projects that were actually holding the ICOs. We then kind of came up with a way of, in a scalable way, because obviously this is a very data collection and cleaning and processing is a very arduous process, but we created a database of every single ICO project and essentially ranked their mechanism design on a scale of 0 to 1 for decentralization. So their consensus could be 0, as in it's not decentralized at all. The consensus is essentially decided by one machine, or it can be kind of 1 where it would be delegated proof of stake, and everything in between. And being able to categorize them automatically through that process, obviously the actual data cleaning and processing did take a while. It allowed us to then run various different regression algorithms on that data set and then glean if there's anything statistically significant. What we actually found was, governance within a mechanism design seemed to be statistically significant at the 5% level for price stability and price performance. So it was positively correlated. Now, that doesn't necessarily mean that people are engaging with the actual mechanism of governance, but that the existence of governance at least positively influenced the price performance or price stability of the ICO project. So that signals to me maybe that people value decentralization within governance, and I expect if we were to repeat this sort of research on a data collection and processing perspective, we might see something a little bit more statistically significant when it comes to those various different pieces of mechanism design, whether it's now going to be EVM versus SVM or kind of all the other different choices that you can take when it comes to actually building your protocol.
Okay. Yeah, I see. That's a lot of like data collection and aggregation for like a single piece. I don't know if I would have like had the patience to do that, but it sounds like a pretty interesting, especially during like the ICO era of having that like succinct measure of decentralization. Definitely an important insight. Um, I'd like to shift over a little bit to CMT from there, as you mentioned. Would be great to hear like a little bit about. You obviously started with the fund about 4 years ago. Would be nice to hear kind of what you guys are about. If you have something like unique or differentiating in your thesis, and kind of just what your days look like.
Yeah, for sure. So the CMT Digital team, we exist as a subsidiary of the CMT Group, which is a larger proprietary trading firm based here in Chicago. They were established back in 1997 around the genesis of electronic trading, originally in Frankfurt, Germany, actually. Frankfurt was one of the first markets to adopt electronic trading, and our founders, Scott and Jan, came from Chicago Research and Trading, CRT. They saw kind of the writing on the wall that volumes in the options markets were going electronic, and so kind of invested in the technology that enabled them to meaningfully participate in those markets. And so I think a culture of technology adoption kind of started there, especially as it would relate to trading practices, took the form of kind of high frequency trading throughout the 2000s, and is ultimately why the firm got interested in blockchain and digital assets. So in 2013, while they were watching the Silk Road auction of Bitcoin take place, they were kind of wondering to themselves, how is a government entity going to auction off what the world thought at the time was primarily a nefarious asset? I think it took a little bit of research and, engaging with the right sort of groups to realize technology is really agnostic to the use cases that people use it for, and people can use it for good or evil, but technology itself inherently isn't good or evil. And that's when we realized kind of the power of the technology, and I think the transformative potential of this technology. So they joined the Blockchain Association to start gathering kind of legal and regulatory footing there. They made initial investments in 2015 before spinning up the crypto trading desk full time in 2017. before going out to acquire a RIA license and launching the first venture fund in 2018. So we've raised 3 funds to date. We're actually in the process of raising our fourth, and yeah, it's a good journey. It's been exciting being part of the team since Fund Two, which was launched back in 2021. When it comes to theses, we describe ourselves as generalists, but we're really looking for uses of blockchain that kind of increase efficiency or lead to a step improvement in utility of whatever function it is that that product or platform is providing in the real world. So an example, like if you could see ID documents, for example, being brought onto a blockchain would be an increase in utility for the world of ID, or iterations on kind of the cryptography that make up the protocols and the infrastructure of blockchains themselves. We do realize that the blockchain space is very nascent, and there are still opportunities to realize foundational infrastructure investments. So we're still definitely in that business of looking at infrastructure and actual blockchain iterations too. And then the third thing I'll add is that we do have a geographic focus as well, being able to realize that blockchain transformation does come within the bounds of what is geographically enabled by markets today. So being able to spot opportunities across the globe and kind of focus on different key areas of the globe among us in the team definitely help as well when it comes to evaluating some of these opportunities.
Yeah, those are pretty interesting. I think before we dive into kind of how you guys developed those theses, how they played out over each fund, be curious to kind of hear a little bit more about you. For the normal person's kind of journey in crypto, I think what relates everyone together is kind of how everyone has to go through some kind of hardship in their own journey in crypto. You know, you learn through the mistakes you make. I feel like 90% of the time when you're in crypto, making a bad trade, you know, buying something you shouldn't, you know, OPSEC, security, all these different things that you have to worry about as a just a normal crypto user. Um, and For us, we kind of umbrella all of that into the name of the show, Exit Liquidity. I feel like everyone has had a moment where they were exit liquidity in that journey. Could you give a story of when you were exit liquidity?
Yeah, I mean, right now my Twitter is being actively attacked, so that's one aspect. I think an early lesson for me, and one that I still try and lean on, is the importance of looking at opportunities and projects from a holistic perspective. Often there'll be a project that it's iterating on a technical piece that is really exciting for me. I spend a lot of my time, most of my time, looking at the technical aspects of blockchains and these uh, processes on top of them. But that's only one piece of the puzzle. And so it's really easy for me to over index on technical purity, if you could call it that, over other factors that are important. And I'll give a example. Early in 2021, I was looking at a lot of various different interoperability protocols. And, you know, when I approach interoperability, I was looking at kind of the most technically sound solution and the most permissionless solution. Because I saw that as, or I valued that as being important to scaling and the adoption of that sort of platform. But failing to recognize the value of messaging and marketing and partnerships in getting that sort of solution adopted uh, is easy, especially when you're over indexing on the technology. So if you compare someone like Axelar and Layer Zero, you know, Axelar in the very early days was trying to go after this protocol approach of having a relayer as this protocol, and the protocol being the function of the relayer allows it to be decentralized and kind of have its own rule sets. But in the early days, if you compare that to Layer Zero's Oracle and relayer setup, you could see kind of the opportunity for collusion at that Oracle and relayer setup. Now, I would then over index on that being important and negatively impacting layer zero, when really that's not the case. And people do value the ease of integration and the network effects of having kind of connectivity to all these other ecosystems. And as long as they can hold you as a protocol responsible, layer zero is going to be running that, or was running that relayer. If they can come back to you and say, what happened to this transaction, then there's some recourse available, and it's not necessarily important to have full permissionlessness in that setup early. So that's a lesson that I think I still hold close and try to learn from. Tech is important, but the best tech doesn't always win, or what you think is the best tech doesn't always win. And it's important to kind of look at the opportunity holistically.
Yeah, I think that's very relatable to a lot of people. I think over indexing for the tech, it's a double edged sword. You could end up over indexing for a protocol with the best memes or the best marketing, and be in a worse position. Um, but yeah, that's super interesting. For kind of how you're evaluating things, or how CMT is evaluating things, can you describe maybe if there were any changes from, you joined around the second fund, to this more recent fund? Maybe if any theses have changed, or any kind of lessons were learned.
Yeah, I think we're always trying to strengthen our abilities as a team. I think that looks very much like being able to fill the team with people who are passionate about the technology and have kind of their own areas of expertise. So within the team, we'll all focus on kind of slightly different areas, and try to bring something slightly complementary to the table. So where I'll focus on mechanism design or infrastructure, or kind of the really nascent opportunities that don't currently exist, for example. Um, Other team members like Charlie, for example, will focus on the social and consumer and kind of gaming verticals. And other team members like Roy can have geographic areas of focus, like LATAM or the Middle East region, for example. Augie joined us last year from Sequoia, and he runs APAC. So Augie and Doug from our team kind of focus on that area of the market. And I think being able to have kind of our hands in all these different pots definitely strengthens the conversation when we're evaluating opportunities. We get to present it from whoever kind of the deal sponsor was, who focused on kind of this is their area of expertise. Perhaps there are going to be some things that they don't take into consideration, and other kind of specialists on the team can raise that when we have that holistic discussion. And so I think that's something that I really value, and I think the team continues to build on. And that's one of the reasons I love being a part of the team, because we all bring kind of something different to the table.
Most people have, I feel like most people have groups that they share research with, and so I think that's really nice.
Yeah, I wanted to ask about, like, even if we take it back a step further than that, obviously I can see how, like, having these specializations and like the actual sponsorship part of like bringing a deal into IC and discussing it from there is like, there's a lot of value in that. I think I'm curious about like the actual sourcing process even before that. It's my understanding that a lot of that is reliant on like your own VC network. So the bulk of the deals you get will be from other funds. But I always thought that like the best opportunities would be found where like no one else is looking for them yet, or no other funds have really found them yet. Um, how, like, what sources do you have for deals, or like where do you go looking for stuff that is like outside of just within your own VC network?
Yeah, I think it's a really important point. So obviously within the networks that we all have, as we're all trying to specialize in one area, we'll all have kind of different looking networks, and therefore a differentiated source of deal flow. Um, Obviously there's overlap there, but I think a key part of my role is research, right? We're doing kind of the early research into the early changes that are going on in the ecosystem. From having that sort of insight into changing areas, I think you start to develop a mental framework of the infrastructure stack or whatever part of the blockchain stack you're looking at. For me, it's the infrastructure stack. And within that, even within your own mental framework, you have kind of this understanding of the various directions that the infrastructure could go and the various directions that current projects are trying to take it. And from there, I think you need to be somewhat ideologically driven in you have this view or this framework for this ideal infrastructure setup. You know, what needs to change between where we are today and that end state that's in your mind, and kind of what sort of protocols could fill that gap. I think modularity is a good example of this. You know, if you're looking at kind of the EVM landscape 2-3 years ago, the Ethereum ecosystem landscape, everyone was looking at interoperability. But what does that interoperability actually entail? Does it entail kind of the data availability, the validator sets themselves, kind of the flows of tokens between layer one and layer two ecosystems? Kind of what is that limited to? And I think asking those sort of questions then allows you to answer your own questions and saying, okay, well, if this existed, if XYZ existed, then ABC could happen. And so I think that points you in the direction of looking into things, alternative approaches to solving some of these problems that may have legs that you haven't looked into purely because it hasn't become a narrative for the broader CT kind of narratives that we see. And I think an example of that is, you know, ZK 2 years ago. Everyone was trying to use ZK for absolutely everything. Many different types of proofs, you know, and people would fight over whose proof was more efficient, you know, snarks versus bulletproofs or starks, you know. But I think fundamentally, everyone was trying to, or at least the layer ones were trying to create layer ones that were encompassing the proofs at scale for their entire state management. And I think that's one approach and was the main approach. But there was another opportunity in that, well, why not limit the scope of what the proof should be applied to a very specific use case and solve for that uniquely? And I think that's how we found Lagrange. Lagrange was looking at providing state root proofs super quickly in a way that was kind of more efficient and scalable than any other proof system because of the fact that it was limited to this small scope of just state root proofs. And I think that then created this kind of broader narrative of ZK coprocessors, which kind of arose out of this, you know, smaller scope use of proving. And I think if you look at the role of, or the ability for that to solve for the infrastructure layer, I would say it's far more usable or modular than kind of having a large scale L1 that can uniquely solve for it, but you have to exist entirely on that L1 to reap the benefits of it. And kind of the more we look at infrastructure pieces, the more we're looking for that sort of scalable modularity as it would relate to blockchain.
Yeah, I think the ZK example is like a really good comparison to draw. A lot of people we move on so fast from stuff in crypto, and like everybody just has like goldfish memory. It's like it's crazy to think about, like, you know, not that long ago it was this big thing that wasn't quite ready back then, and like, you know, we had all these arguments about which approach is better. And then, you know, all of that obviously contributes to like the narrative and what actually creates like these different trades and investment opportunities. But then when it comes down to it, like, where, I don't know, I think like you said, the height of that craze must have been like 2 years ago at this point, year and a half, 2 years ago. And now here we are with like different solutions, an entirely different space, obviously. And it's like, I don't think it's anything like what people back then had initially expected. And it's still like, it still has a long way to go, like most other things in crypto. Um, uh, it's a lot of this stuff like falls into that category, right? Where we see something, hype's built up, You see a bunch of capital flow into it, you see a bunch of attention around it, and then it always takes like longer than people expect to reach a point of like actual like utility, something that's like nearing that end stage of being, useful infrastructure. I think L2s, not ZK L2s specifically, but like just optimistic rollups have only just recently kind of hit that point following the introduction of blobs. What are some of the things that you've been looking at that you feel like are in that sort of later stage of like, okay, this is something that we've been working on for, years and years and years, and now it's starting to get to a point where like we can start to see you know, this real like sort of later stage utility and ability start to emerge.
Yeah, I mean, I would definitely say that ZK is one of them. I'd say that, for example, I'm quite excited about the ZK TLS products that we're seeing. I think a lot of what blockchain adoption has struggled with historically has been kind of the data debt that's associated with personal use. If you are to onboard to blockchains, there's blockchains have no context about who you are, and there's no kind of way of bringing that into it. And I think with ZK technology, and now with what we're seeing with these modular implementations of ZK in co-processors or kind of these smaller scope proving products, like ZK TLS, it provides an opportunity for you to then onboard a lot of data that you otherwise wouldn't be able to, and kind of attest to it in cryptographic ways. Um, I think there's also, so I think that is one aspect of things that we could see movement on in the next year or a year and a half here. I would love to see a lot more personal data being secured by cryptography and then, monetized through blockchain incentive mechanisms. Um, I see that as the opportunity, by the way, the cryptography to really secure the underlying, and then for the mechanism design of the incentives of the protocol or whatever the crypto structure may be, to then realize the business scaling of that underlying. Um, I think another aspect is when we look at what blockchains actually uniquely unlock compared to Web 2. And I think that is self ownership and the ability to then exist within those transparent incentive mechanisms. So if you can then onboard your data in a way that's secure and verifiable and own it yourself, I think then there's an opportunity for longer network effects that come with that. If you then own your data, you may onboard to some platform that uses your data, but let's say a year down the road, you're no longer happy with that platform. The beauty is you don't have this kind of technical debt associated with moving, because you've always owned it. You can always just take it with you. And I think we're in a stage of adoption where people have been building up their crypto network use over the past few years, at least the degens have. Now there's the opportunity for regular users to perhaps onboard and retain some of that personal information, and kind of explore the ecosystem and take that with them. So I'm excited for kind of these modular verifiable pieces and kind of the network effects that come with large adoption of these modular verifiable pieces.
Yeah, yeah, makes sense. Lots of like infrastructure scaling and improving block space in terms of throughput as well as just like functionality. We had our buddy from, oh man, this must have been like 6 months ago now. We had our friend Dougie from Figment Capital on, and he had some,
Love Dougie.
yeah, great guy, great guy. He had definitely like some similar ideas, like from a much broader perspective on that front. And one of the questions I had for him was like, okay, like you're interested in essentially, improving block space, making it more accessible, cheaper, higher throughput in some cases, like adding different functionality to it with things like co-processors and TEs or whatever. But what do you think that it needs to be or it should be like used for? Or what do you think like that looks like to the point where, because obviously, we have all these different methods of pushing the envelope in that sense. And this kind of goes back to the argument, which is like a little bit played out of like people talking about needing like novel applications and all this stuff on chain. Um, but I was curious to hear his take, and I'm curious to hear yours now as well, as to like, we can sit and push the envelope all day on what efficient block space looks like. But in your mind, what do you think? What do you think is going to be like the end goal for it? What is it going to be used for over the next, I don't know, 5, 10, 15 years?
Yeah, I think, I mean, block space and the commoditization of block space, I think, is something that's still ongoing and hasn't been fully realized. People love to say that block space has been commoditized. I would argue that block space can only be commoditized when access to block space is universal and doesn't come with kind of a prerequisite. And right now, accessing block space comes with the prerequisite of you having state on that block space already. Unless you currently exist and your state is determinable on that block space, you can't update your state on that block space. So I think that hasn't been realized yet. And we're looking into approaches at the transport layer for data availability to answer for that. How do you fully commoditize block space such that you can switch your state record across different block spaces and for it to not be corrupted? You need to be able to reconstruct the block space. You'll reconstruct your state across multiple different instances of block space, which currently today you can't. So that's why we're looking into the transport layer for block space. The other thing is, I think block space from different platforms look to provide different optimizations. For one, it might be fidelity, so speed at which you can kind of reach that finality. Throughput. People may optimize for different things, but ultimately, if their block space is set for longevity, it's going to be able to optimize for something uniquely, and people are going to be able to access it permissionlessly. And for that, I think it could go a number of ways, but it's very much determinable by the business development efforts of these organizations. The engineers may optimize for one thing, but ultimately it's on the ecosystem and BD efforts to actually bring users to that block space. So I think that challenge just becomes easier with permissionless ability to use block space. But it's very much on the business development side of things to see which direction it goes. One that I'm pretty excited about is the use of, privacy, whether that's achieved through fully homomorphic encryption, whether that's achieved through TEEs on the kind of the local device. It's that privacy has been a inhibiting factor for a lot of, let's say, institutional DeFi, and kind of the custody that comes with that as well. But if we have that freedom to change your state record across different block spaces, then you can realize, the benefits of privacy on one for one type of transaction without necessarily having to shift your entire infrastructure setup to that environment, which may be, very computationally inefficient or expensive and kind of wouldn't make sense for the rest of the platform's functions. So really that composability between different infrastructures, I think will help with the realization of kind of prolonged use of blockchain technology and infrastructure. If a institution feels like, yes, they can adopt this platform today, but if it's not going the way that they expected in a year, they have the freedom to move or to change it without kind of it all being for naught. So yeah, that's kind of one aspect that I think is exciting for the next year here.
Yeah, I think one element of kind of ZK and privacy on chain that I feel like I haven't seen discussed as of recent is the idea of like on-chain credit, and having like a credit evaluation system that also maintains like privacy in DeFi. That's felt like the kind of ultimate barrier to creating a financial system in the decentralized world that can kind of compete with centralized infrastructure. Right now, it's like comparing apples to oranges when you kind of have to have over collateralized lending, and you're not really getting the same kind of experience that you would in a centralized space. Do you imagine that we're like a step closer with these kind of ZK privacy implementations to some kind of on-chain credit?
Aryan, you're muted.
Sorry. When you say credit, do you mean like gas fee credits, or what sort of credit are you referring to?
Like a I approach a lending protocol, and um, I have different uh, documentation or attributes of myself that depict how much I should be allowed to borrow based on my past.
Gotcha.
So yeah.
Yeah, I think it's a really interesting point because I mean one piece that we have discussed a lot internally is when you attest to something, it's captured in that moment in time. So I can attest. So some zk function could attest to the balance in my wallet for some token, but how do you then make that attestation usable? And I think that this is something that we're seeing across the board because it's trying to set precedent. For example, in a zk TLS product, no platform that I'm aware of has accepted verification of identity through a TLS certificate of viewing some identity document before. It's kind of having to set precedent of what clears the bar for verification in the world. Typically, that has been kind of you upload your ID or you upload your bank statement, and someone verifies it and underwrites it and issues you a loan on that. Now, maybe that just means the trust in the technology and kind of the TLS certificate aspect, for example, will be there. And so the lenders are willing to make that underwriting decision. I think it's a matter of who can set that precedent first at scale to then enable others to move into it. And this is a question that we ask some of these TLS products, for example. How do you view setting precedent for accepting your technology? And I think it's a shift that has happened historically when new technologies have made themselves available, but it's always had to have some sort of sponsor or some sort of risk-taking use case to enable it fully. And I think perhaps infrastructure can improve lowering the bar of what would count as a proof or a valid attestation. There's also the issue of how often does that attestation then need to be rechecked or refreshed, because obviously it's a proof is only good for that moment in time for that state. So I think it's going to be a mixture of the business development precedent setting and kind of actual use of the technology with some of the infrastructure pieces that could help those companies feel comfortable. And I think it's a matter of talking to the companies and the potential lenders and seeing kind of what are the barriers to allowing this technology to be adopted today.
Yeah, could you explain TLS? I don't think I recognize that acronym.
Yeah, so TLS is transport layer security. So in TCP IP, the TLS certificate is something to do with HTTPS. It's kind of checking that the server that you're receiving kind of some data from, let's say for this podcast that we're viewing right now, there's going to be a handshake protocol that's going on in the background between my machine and the server on which we're hosting this podcast. And that handshake is essentially telling me that, this podcast is being hosted by a certificate that is belonging to, this entity, this IP address, and it just kind of verifies the authenticity of that connection. So if I want to prove my bank account, for example, I can log into my bank portal. The TLS certificate is then tied to my bank and to my machine. And so if you're to then provide a proof on that, you're proving whether the data that you're receiving is of a certain type or is of a certain characteristic, and relying on the security that the data that you're receiving is from the certificate that you say it's from. At that point, they can then tie the contents of that data to the person or the entity that issued you the data on your UI without actually revealing that underlying data. So it's only as good as your trust in the handshake protocol and that kind of TLS certificate. But hey, it's good enough for HTTPS, so why wouldn't it be good enough for this point here?
Okay, I see. Yeah, that's my that's the first time I think I've come across that too, or at least like heard it explained. I've definitely seen the seen the term thrown around. Um, Going over a little bit to like user level stuff. Um, I'm curious as to like what you spend your time doing on chain. Obviously, you have a pretty research heavy background. It's quite like you guys are a pretty thesis driven fund, as you can see by your portfolio, as well as like your blog, where you have just the quality and like the tone of your research definitely shows that. But I think everyone who works in crypto in some capacity is also a user, should be a user at least. I'm curious as to what you spend your time doing on chain. Are there any applications you find yourself interacting with? Any chains you particularly enjoy using, or even like any types of actions you find yourself coming back to again? Yield farming, lending and borrowing, LSTs, anything like that?
Oh boy, all of them, all of the above. I'm on pretty much every single chain there is. I have so many different wallets across different chains; it becomes hard to keep track. I try to make it a point of exploring every ecosystem that I can, purely just to experience it, if nothing else. Um, but there were a few applications that I found myself going back to for a while. I grew up as a gamer. I sadly don't have much time for it these days, but I do try to experience the crypto games that are available to experience and kind of see whether the fundamental unlock of self ownership is adopted in a way that allows for kind of growth in that experience. So, and I think it can vary. So there are some games that are better because of the fact that they have that self ownership aspect. And there are some games that just don't have that adoption yet or the network effect yet to fully realize it. I enjoyed playing Shrapnel, for example.
Mhm.
That was a fun game to experiment with, being able to actually own your guns and in-game items. I think was really useful. I was a really early player, a long time player of Pirate Nation.
Wow.
Um, that was an awesome experience. I'm not going to lie. At the beginning, I remember when they were in the treasure ecosystem, uh, very, very kind of limited users to begin with, but the community was so organic and the usage of the game was so organic. There were, farming elements to it, but it wasn't like the players were purely going there to farm the protocol. And I think that's something that we saw with something like Krabada. I also played Krabada a lot, but we saw early on in the Krabada days that people found out how to bot the accounts really quickly. And when that happens and it becomes purely value extractive, you lose that game experience element. And I think that's what happened with Krabada. But with something like the treasure ecosystem and then Pirate Nation, you had kind of these organic users who enjoyed the game for whatever reason. I thought it was good fun, and you saw the success of that broader ecosystem into what it is now with proof of play. As a result of that, you had these engaged community members who actually enjoyed the fundamental experience of the game, and the blockchain aspects became a benefit. And I would argue that when the blockchain aspects are a benefit and you actually enjoy the usage of the game, it allows the developers to then build in the true benefits of blockchain, regardless, irrespective of kind of the success of the game. It becomes like this larger approach or this larger opportunity for the game to continue to retain its users as a function of the blockchain optimizations that they put in place, whether that's cross game asset composability through a partnership with another game that they think is good, or whether that's in real life events with kind of the in-game assets as gating factors for access, whatever it may be. I think the blockchain aspect then adds to the experience, which is fundamentally kind of has been good. Otherwise, the users wouldn't be there.
Yeah. Yeah.
And
That's
then
really interesting.
I do engage with kind of meme coins, prediction markets, also on Polygon. Sunflower Land is pretty fun. I'm a big time user of Near. I always really liked Near's technology. I don't think they've been able to gain the network effects of use. I would say that they still have a good shot though, because there were a few things that really stood out to me with Near. They had like a finality gadget and sharding that I thought was pretty interesting when it came to base level scalability. But there were some optimizations that they made at the core protocol level that just stood out to me as being a more production ready blockchain. Things like 20% revenue share for the smart contract deployer at the smart contract level. That sort of thing, is now being implemented in Solana. Things like name services at the wallet address level. Just this base level of abstraction that allows developers to build more consumer ready products, I think helps. And I think that's why when you look at Near's users, you really see less users like me who are kind of self-custodying their wallet and interacting with everything themselves, and more users that are derived from these Web2 applications like Sweat Wallet or Kaiching, who are users of this application who may not necessarily even know that they have a blockchain wallet underneath the hood. So that's kind of an approach that I think will be really interesting to look out for the next 2 years, in terms of how these different applications lean into the blockchain aspect or not of their infrastructure, and whether or not they want to allow their users to explore kind of the broader DeFi ecosystem from within their app, for example.
Yeah, lot we could potentially unpack there. That's definitely like an interesting basket of like applications and ecosystems. It's interesting to hear you mentioning like gaming first, given that you spend a lot of your like your research and investment and just like headspace on this stuff that is like so complex for the average user. And then when it actually comes time to go and play around with this stuff, you go and like play games. It's like a barbell strategy kind of thing, but like for your headspace almost. The mercenary farming thing is, that's obviously a constant like back and forth in crypto. From what I have seen as of more recently on the gaming side, is it's like, obviously the whole like P to E wave of last cycle really like, it really did a number on like the builders and as well as the users and even like public perception as well. And these days it feels like I'm seeing like an almost lack of financialization on the gaming side. You have these fully on-chain games of every action exists on chain, and it uses the blockchain for reasons that aren't necessarily financial yet. So you end up with these really small user bases of super dedicated users and gaming guilds who are just there to have fun. Like they may not have any expectation of rewards or financialization in the longer run. And to me, that's like a really good starting point. To me, all crypto products or all crypto niches should start out that way. It took a lot to get there. Obviously, it took a lot of like breaking trust and people getting burned and people being exit liquidity. But I think it's like it's not one of the places where I spend most of my time. But just given what I've seen from the outside, it definitely seems like one of the more interesting and genuine places to be at this time. Um, yeah, on the ecosystem side, definitely. Yeah, go ahead.
I was just going to say, I think it's an interesting point because play to earn, I think, captured a concept that makes sense, but the implementation or the realization of the early stages of play to earn perhaps weren't ready for sustainability when it comes to the financial financialization that's going on. We were really early investors in Axie Infinity. I think one of the first rounds, and Horizon blockchain games as well. And when you're looking at that sort of approach, I think what really stood out to us was, the ability to financialize your game activity. They were one of the first to actually kick that off. But when you look at some of the actions, and we saw with that farming aspect, you see that the game experience and the financialization become completely separated. And ideally, you want those two to be interwoven to a degree that it becomes kind of unseparable. You shouldn't be able to bot it, for example, without experiencing the game yourself. Um, and I would argue that it's only from a point where you have real users using it, not for financialization necessarily, that you can create a financialization layer that is sustainable and makes sense. Whether that's through partnerships with other games, you know, marketplaces for various different items, whatever it may be, it's important to realize that, not everyone can extract value from it, and the only value that you extract should be closely tied to value you've provided to the platform, whether that's financial, whether that's time, achievements on the game. It needs to make sense. And I think the early play to earn games that we saw that perhaps weren't well structured, didn't rely on that sort of robust ecosystem to support a sustainable financial layer. But I would argue that that's where games today and ecosystems today are laying the groundwork to realize later.
Yeah, yeah, it was definitely. Uh, they had like the pieces together from an early stage. I definitely agree with that. That's like what a lot of people, what drew a lot of people to crypto in the first place. I mean, myself and Cedo, the whole thing was DeFi for us from an early from an early intro into the space into like our first few opportunities and building or researching or a lot of the podcast as well, obviously, and being able to have that financialization component where just the base level of what's going on with incentives, with the removal of middlemen, like it's what interests a lot of people, but it also like creates the potential for that kind of stuff to happen for rampant token emissions, these unsustainable Ponzi's, let's call them. I don't like that there's a negative connotation to the word Ponzi. I feel like we need a different word for it because it can
But I
be
think
like a useful thing.
Ponzi, I think, refers to only the value only being derived from new entrants. Whereas I think you can lean on that sort of growth mechanism early, but there's going to have to be some sort of value derived from anything other than new entrants. Whether that's your
Yeah.
activity, whether that's what you build on the environment, whether that's what you take across platforms. So I think at the beginning days, absolutely, but you got to lean into what are you actually fundamentally providing as an experience, and what are people willing to pay for it.
Yeah. 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 It's well said. I think that makes a lot of sense. Um, I'm curious to hear some of. I know we're coming up on time here a little bit. We can be cognizant of that, but I'm interested to hear some of the deals you guys have done maybe more recently or stuff that's getting ready to go to market soon that you are particularly excited about. A lot of people like will follow raise announcements and follow certain funds as a measure for alpha, or it just helps to like narrow down the field from the thousands of new apps, the thousands of new protocols that are being released. So would be interesting to hear your take on some of the stuff you guys have looked at that's coming out soon or that you looked at recently that's interesting.
Yeah, I mean, I think on the infrastructure side, I'm really interested for this transport layer kind of innovation that's occurring at the DA layer level. We invested in this company called Optimum, and they're kind of getting ready to go to market. I'm sure you'll hear about them soon. I'm not sure how much I can dive into it here, but there's also, I think, one thing I'm really excited about is the proliferation of DeFi beyond our ecosystem today. This is something that we've been holding kind of top of mind for a few years now. I'm sure everyone has been, but I do think that we're in a place where there could be the regulatory frameworks, plus the kind of familiarity with the technology for some of these larger financial players to move on chain in a way that they haven't before. We were investors in Superstate, and I think that sort of real world asset onboarding is a really, really large opportunity. And I would argue that it's only with the realization of those sort of assets being onboarded that DeFi can become fully what it has set out to be. The asset base that would then on board would essentially underpin the base yield for all of DeFi in a way that is then sustainable. Right now, I think one of the problems with DeFi is people would say the TVL is just not robust enough to support, is just not large enough to support large scale yield generation. And I think if that changes with the onboarding of some of these real world assets, we will see a level of stability that introduced to DeFi where it hasn't existed in the past. And that sort of opportunity for the base yield of Ethereum to be adopted, I think then further supports and secures Ethereum security itself. Now, restaking is interesting as well. I think you've probably had a bunch of different conversations about restaking on this platform. So it'll be interesting to see how real world assets and some of these more, let's call them idle TVL bases interact with some of these yield opportunities. And I'm especially interested to see how the choice for, and I want to be careful, it's not rehypothecation, but the choice for how you rehypothecate on your assets, whether it's within DeFi or whether it's within a Ethereum security perspective, plays out. Because I don't think that trade-off, or not trade-off, but that kind of existence of it being either you're rehypothecating within DeFi or you're pledging your security to, you're pledging your economics to a security system, will play out. So that's really interesting to me.
Gotcha. Yeah, I think we've talked about restaking heaps on here. It was it really feels like it was like the only thing going on the EVM for a while, or at least like the only thing that people were really excited about. So and there still is a lot of merit to it. Obviously, still a lot to be seen, I think. It's just one of those things that we talked about earlier. It launches early on. There's tons of hype. And then it doesn't even take a long time to ship. It just takes long in the minds of like CT people. So you end up in this like sort of weird in between stage, kind of waiting for stuff to ship while people get impatient and move on to the next shiny thing. It's the way
We
of
are
life here.
we are excited about that space though.
Yeah.
We're investors in EtherFi, and for example, we what I really like about what EtherFi are doing is they're kind of giving us maximal choice. You've got some ETH that you want to earn yield on. It's really up to you. Do you want to put it in a cash product and generate yield off of basis trades, for example, that they're then pledging the assets to, or do you want to restake that ETH and earn points and yield on EigenLayer, or do you want to put it into your card product, so you're generating yield in the form of USD that you can then use on your debit card? I think that sort of platform that provides the retail user the opportunity to then put their assets to work in a way that's tried and tested and kind of has the plumbing in place already is really interesting. And so I do envision a world where that could be the next adoption of DeFi for the layman. Sticking $10,000 into a yield generating account on which they can then go and spend real dollars on their debit card in the form of yield.
Yeah. Yeah. No, I totally agree with that. I think that makes a lot of sense. Definitely something that'll be exciting to see play out. We are a little bit over time here, so we can start to wrap up. Just before we do so, it would be good to we'd like to give you a space just for any like closing remarks, anything that you think the people should know about yourself or CMT Digital, or even just anything in general. Any last words for the people? Always good.
Last words. No, I mean, thank you for having me on. It's especially in times like this when there's global uncertainty and perhaps markets are not as stable as we would expect them to be. I think it's easy to get pessimistic about the space that we're in. Um, I think it's always really useful to look back on the history of this space. If we think back to 2018, 2019, I would compare this sort of market position as somewhat similar to that era, but the difference in uh, people's kind of engagement at this stage, people's kind of building at this stage is night and day between now and 2018, 2019. I'd say this is probably the first cycle where we haven't had the depths of the bear in a way that was as depressing as those eras were, perhaps. And I think it's important to realize that and to think back to that and to think back to all the progress that this industry has made between that point and now. I think once you have that sort of context, or you think about that context a little bit, it's much easier to get excited about the direction that we're heading in and the real adoption that this technology is receiving or imminently receiving.
Yeah. Yeah, no, that's very well said. I think it's easy to lose sight, to get distracted, lose the plot a little bit, especially with all of the madness that goes on. So a little a little like refocus into the big picture stuff of why we're all here is always useful, always welcome, especially for me. That is a good place to wrap up here. I think definitely some nice closing words there. Uh, Thanks again, Aryan. That was a lot of fun. Really appreciate you coming on. Um,
Thanks for having me, guys.
yeah, absolutely. Anytime. That was episode 87. And thanks again, guys. We'll catch you all next week.